Hello and welcome back to Soar Financially, a channel where we discuss the macro to understand the micro. I've invited a phenomenal guest today. Kroc describes him as a sharp, no-nonsense voice on finance. Think Austrian economics meets contrarian skepticism. I love that description of my guest because I love Dave Collum. I love having him on the program. He's a pragmatist, he's a libertarian, and he thinks very differently than maybe the mainstream media does. So it's really refreshing to have him on the program. What are we going to talk about? He was recently on Tucker Carlson, so I'm quite interested to hear about his experience there. But also we need to talk about the U.S. economy. What is happening in the market? How stable is it? How topsy-turvy are we perhaps? Should we be worried about a crash? And of course, gold and silver. What are the precious metals telling us right now in terms of price action, and what does it mean overall? So lots to discuss in a very short time. But before I switch over to my guest, hit that like and subscribe button. Helps us out tremendously. We much appreciate it. Now, Dave, how are you? It's good to see you again.
I'm good. And we saw each other in New Orleans. I don't schedule interviews there because I figure if I'm going to fly to New Orleans, I should probably do things that I can't do in my office. So in any event, yeah.
No, it makes a lot of sense. It's always great to see you there in New Orleans as well. You always hang around the green room with a lot of great people.
I completely just park in the green room, and everyone who's talking goes through the green room, and we chat, and then they go out and talk, and I watch it on the screen, and it's a great place to view the whole meeting.
Absolutely. No, I'm a bit jealous that you get to do that because I actually got to work when I'm there.
Right. So. I know. You have a mouth to feed.
Bummer. Exactly. Right. Steak isn't cheap. What was the saying? Right. So,
yeah, no, I guess.
Dave, it's great. it's great to have you back on the program, Dave. But before we dive into the markets, precious metals, and all of that, let's start with your interview that you recently gave on Tucker Carlson. What was the experience like? Tell us a little bit about it. What was some of the feedback you got?
Well, so the experience was interesting because it got put off a couple of times, and I must say that I did a little deep diving to make sure that I wasn't being duped, that someone wasn't rickrolling me, and so I was actually rather relieved to get to the hotel and find they had a room for me waiting. Tucker off screen is very similar to Tucker on screen, so I didn't see some on-off switch. I intended to take Tucker places that I knew Tucker knew a lot about, sort of dark topics, things like that. And so I kind of moved like I was had ADHD on purpose, and moved him to topic, which I knew he would be able to chime in on or at least have an opinion. He has different sort of personality types when he interviews, and then he gave me the I don't know what I'm doing, but you do sort of delivery, where I'll tell him something I know he knows, and then he pretends like he doesn't know. But there was some great feedback, some stuff that we talked about that I didn't know, and it showed you how on top of it he was. Afterwards, we talked about stuff that was so dark, and I wasn't going to tell anyone what the topic was, but then he did a couple of podcasts, and it was on satanic pedophile networks and things like that, and he lit right up on that topic for about an hour and a half after the talk. The feedback from those who I think just watched it sincerely was very strong. I even got an email from a dean saying I loved it. I don't agree with everything, but it was really good, and they liked the market part. I made a comment that was really about World War II and about Stalin being a bad guy, and someone said you said it indelicately, but your point was that siding with Stalin is a highly questionable thing. There's categories of characters out here. You've got Jews, you've got Israelis, you've got the government of Israel, and you've got Zionists, and you've got rabid Zionists, right? The rabid Zionists went at me, and by virtue of the fact that I just used the word Hitler. I quoted Patton, actually, and they got bent out of shape. And so, Mark Levin, Ted Cruz, some head of some national Jewish organization, whatever, they wrote some very untruthful things, and they went at me. And so, give me a baseball bat in 10 minutes with Mark Levin and Ted Cruz, and I would solve that problem very quickly. And then Victor Davis Hanson went at me, which was really interesting because he's a prominent historian. He was 0 for 3 in his criticisms. He was wrong in every criticism. And then he kept going at me, and I became clear to me that he had been called off the bench to attack Tucker using me as a proxy, and it was all about Zionism, and so, I don't have it. I've been agnostic on the subject my whole life, but now they're pissing me off. So whatever. You've lost one. How's that? They've lost one.
Yeah. No, it's interesting. I watched it as well. It's it's always fun to see somebody on a popular, I wouldn't say mainstream television, but a popular channel.
Yeah.
And, having the pleasure to interview you here as well. So it's a privilege, and I much appreciate it there, Dave. Let's talk about the economy. Let's talk about the markets.
Okay.
The feedback from your dean apparently was quite positive on it. Where are we? Overvalued equilibrium is a term that you've used or that has been used. What do you make of that? Maybe explain that a little bit.
I don't remember the equilibrium term, but I think we're overvalued by round number 200%. The awful part of that is it will take decades to grow out of that mess. That's not to say it couldn't in a couple of years become back to fair value, but decades from now we will be at the same price if we regress to the historical mean, because you grow at 2.5% a year. How do you get to a 200%? How do you make up the gap to growth? It takes 45 years to do it at 2.5% a year. So, and other metrics, it's not just the Buffett metric. They all show that we're that overvalued. We're in the epic bubble, which some people have called the everything bubble, which conveys an important part of it. And that is, it's in every asset class. It's in real estate, commercial, residential. It's in the equity market. Be very, very careful about people who tell you this is cheap compared to this. Okay. Your benchmark should be a historical one. So I use Case-Shiller from 1880 to 1990 as my benchmark. And compared to that, we are 3x overvalued, meaning 200%. So I think we have nothing but pain and suffering. It's some point in our future. And I think that there will be a point in time where you really wished you were not anywhere near this market. And it's some fateful day, many years from now, maybe, it'll be the time that when you're most pessimistic will be a good time to buy.
What has you most concerned now? Like, your various different topics, or where do you see the biggest cracks appear right now? Is it the debt? Is it inflation? Is it employment? Is it the personal, on the personal consumer sentiment, perhaps? A credit card story. We had an auto loan crisis here. We had auto manufacturer suppliers go belly up. Where do you see the biggest cracks, Dave?
You just made a nice list. I was on a panel discussion with guys who are way more qualified than me, at least according to a resume. And some of them made the claim that AI wasn't a bubble, and they were talking about how transformational it'll be. But I go, but that's not what defines a bubble. A bubble is when you're paying way too much for whatever that transformational asset is. I actually think the NASDAQ, for example, is going to go back and test the 2000 high. I think it's gonna go down and find that level on an inflation adjusted basis. And so what scares me? Well, first and foremost, the entire boomer class, which is a source of the bubble, because of the demographics, I think are gonna end up eating it pretty badly, and they're going to get their savings gutted. They think they're okay now. They're not going to stay okay. The minute they start liquidating, the Mike Green passive flow model is going to reverse, and that's when the shit's really going to hit the fan, in my opinion. So, and it's not going to be. Don't label this Dave calls a crash. I hate that. Dave never calls a crash. Dave doesn't think crash does any good. You crash, the dip buyers show up. You are going to rot to death. You are going to be a decayed carcass in a shallow grave. In this thing. Now, what I've been calling it is the complacency bubble, because you can't find anyone who doesn't know it's nuts, right? You can't find anyone who says, "Oh, the markets are really cheap now." You can find guys who will lie their ass off and say that to their customers because they want their vig, but they're lying and they know they're lying. There's no one who could pass a lie detector test who doesn't think these markets are pretty nuts. And at the same time, they think they're going to be saved. And that's the part I disagree with. There has never been an overvalued market that didn't find its way back to cheap. This one will do so as well. Curiously, '09 was not cheap. That's the thing that people don't understand. '09 was at a reasonable valuation. We had fallen from space to get to reasonable valuation, but it was not cheap. And especially given the damage that had been done to the banking system and the economy, but it was just based on PE ratios and things like that. That was confirmed to me, not just within my skull, but Jeremy Grantham said that. I had dinner one night with Mark Spitznagel, and he said that it was below historical average valuation for about a month in '09. So if you think '09 some benchmark of cheap, that's your first big mistake, in my opinion.
This time is different. There's a famous quote that always gets misused, and it never is different. Or it's often the same. History rhymes; it never repeats, and all of those. But
it is always different. Also, that's the irony. Is there is always a difference. This bubble, this one, for example, the complacency component of the bubble means that we're never people who are waiting for euphoria, the real sort of sincere, unbridled euphoria. I don't think you're going to find it. I think you're going to find all the guys buying, all the guys who are 100% long. They're all going, and I'm going to either get out or the Fed's going to protect me. It's not a 2000 euphoria. It's not a 1929. It's not a Nikkei 1989. It's not a housing euphoria of 06, 07. It's a euphoria of a kind that says the markets are screwed up, but I will somehow be okay. And you will not be, in my opinion.
There's a very, terrifying precedent that was set when Silicon Valley Bank sort of went belly up. But
how'd they save it? How'd they save it?
They just guaranteed the money for everybody, right?
Well, I guess so. But there must have been a lot of money spent that we didn't get a lot of dollar values out of the system. I mean, they saved it in '08, '09 by dropping $30 trillion into the global banking system. And so we at least have a number, right? I've not seen a good explanation.
Maybe the private banks jumped in. I think JP Morgan, Wells Fargo bought up the little ones to save them.
I guess so, but they were pretty big regional banks. That could have been a cascading failure, and they somehow stemmed it. So thus complacency. It's like, see, they saved us. Yeah. Well, they're not gonna be able to save you. Once it gets ugly, the Fed, I think if I were a Fed governor, my biggest fear would be that I would attempt to save it and fail and be shown to be a feckless, neutered bureaucrat. And so they will step aside and not risk failure of their interventions, I think. I think they'll let the fire burn out, and then they'll bring in the hose and pretend like they put it out.
It's always good showmanship, usually, out of Washington there. So
it's showmanship. It will be showmanship.
Yeah. Dave, the other guest I really talk demographics with is Neil Howe, fourth turning and all of that. On that topic, the boomers have a ton of money in their bank accounts. They have a ton of money saved up. At one point, I think it was about a year ago, the topic came up. It's like, we need to get the boomers to spend their money. In Germany, we're trying to tax everything left, right, and center right now. We're trying to find new sources of income. How do you see that developing? Like, how safe is the money of the boomers?
How do you spend your money? So you've got well, if you're a boomer, you've got your money in a Vanguard index fund. To spend that money, what do? You sell it. You have to sell the index fund, right? You have to sell the bonds. You have to sell stuff because it's not sitting in savings accounts. And so I believe that the idea that the boomers are somehow going to transfer the money to the next generation with no adjustment for value, I think is a highly flawed bit of thinking. I could be wrong on this. I have trouble imagining that this gigantic bolus of paper value is going to be transferable to the next generation without it being revalued. Because they do. Who's going to buy? I own a house on the lake. What 25-year-old is going to be ready to buy my house from me when it's time to go to the nursing home? Right? They don't have the money.
No.
Where's it going to come
We need
from?
low interest rates.
No.
We
need cheaper houses.
Yeah.
We need to let the system equilibrate. There's the equilibration. We need to let this. So low interest rates is just a way of saving the boomers.
No.
What you want, I'll tell you what you want. If you're a boomer, your worst nightmare is dropping asset valuations, right? Plummeting asset prices. If you're a 20-something, 30-something, 40-something, that's what exactly you want. You want to be able to buy assets at a reasonable price. This is like right now we've got this gigantic pizza that the world's sharing. And you can buy a tiny little sliver of a slice for a fortune. How is that a good deal? You want the boomers to die off and leave the pizza to you. You're not going to grow the pizza. You're just going to have a higher share of it. So the demographics are a problem.
No. Maybe as a counter argument here, Donald Trump and the Dell family just joined forces, wanting to give every kid and every newborn a brokerage account with some money in it to invest. How is that counterbalancing what you just said? Does it even have a chance to counterbalance it?
You don't smell scam, right?
I hear Ponzi. That word keeps coming up more and more.
No. So Michael Dell giving $6 billion. You don't think there's some sort of kickback? Federal government spends trillions upon trillions upon trillions. You don't think Michael Dell's got a plan? And if we're just going to spend government money, we're just giving free money to the youngsters. It's just UBI, basically, right? No, I haven't figured out what the scam is. But the minute I saw, I go, giving $6 billion to the federal government is not charity. I don't know what it is. I don't know how this is going to play out. I do not trust it one bit, not at all. And it's based on no evidence of what they're up to, but they're up to something. It's like when your kids are upstairs and you can't hear anything. You go, there's not a shred of evidence they're in trouble. It's the silence that you go, I'm going upstairs to check to see what those kids are doing.
Maybe their Dells are buying TikTok or something like that, or some hardware deal.
No, that's already been bought by Israel.
Oh, TikTok has?
Yeah.
I missed that one.
Well,
can elaborate?
Got bought by Larry Ellison.
Oh, okay, yes. He was Oracle was in the race for that.
He's an Israeli, for all intents and purposes. I'm a little pissed off. So you're picking up. This is not anti-Semitism. This is Larry Ellison's repulsive personism. This is Larry Ellison wanted to vaccinate everyone. This is Larry Ellison who pontificated the other day about how great it is that the world will be very well behaved because they'll monitor everything we do and they'll know what we're doing and therefore we won't misbehave. I go, someone drive a truck over that guy. And Larry Ellison will make sure that the United States is second, Israel's first. And I don't like that. And I'm pissed off about that. And I'm not anti-Semitic. I've never even thought twice about Israel. I've always thought it's a tough place to be. And they've lost me. They've pissed me off.
Yeah, it opens the doors to a whole lot of different conspiracy theories.
It's not a conspiracy theory.
No.
They are conspiring.
To what happens. That's what I mean. It opens the door to the possibilities.
I haven't figured out Dell. I haven't figured out Dell yet. If someone knows, just send me an email. What is Dell up to? He, by the way, responded to me the other day on Twitter. Made no sense whatsoever. Why is he responding to me on Twitter?
What did he respond to?
Well, I said that Dell's share price is up X-fold and their revenues are up Y-fold, and they didn't match at all. And he just kind of poked at it. He didn't actually refute it. He just kind of poked at me.
Interesting. Interesting. Let's keep coming back to the markets here, the economy, real quick. What do you make of the consumer right now? It's Christmas season, of course. We just had Black Week, Black Friday, and all the online Cyber Monday and all the shenanigans, behind us now. What do you make of the consumer? How healthy is the consumer right now, Dave?
Well, I would consider them healthier if they spent less. Let's start with that. Spending is not a healthy consumer. A healthy consumer. You know how China did what it did, its master plan? They saved half of everything they earned. That's how China. That's how China came from the Middle Ages to a dominant economic superpower. They didn't use foreign capital. They saved their money. So a healthy consumer would not be dropping all sorts of money into Christmas.
No.
They'd say, okay, look.
Germans did the same, by the way. Our savings rate was extremely high. So sorry to interrupt, but
well,
we saved our way out of it.
The Germans have found a way to screw up their economy in a totally unique way. So that's a separate.
I was going to say that's a separate rabbit hole. But just back on the consumer. Sorry for jumping in there, Dave. But,
I don't know, but if they're buying Christmas presents using pay-go plans, they can look healthy by virtue of the fact they're spending money that they don't have. Is that a healthy consumer? No, that's not a healthy consumer. Right? If you can order DoorDash and pay in 4 installments, that's not a healthy consumer. I've been wondering about, how you go into a convenience store and it always says help wanted, hiring. Is it possible that those are there, but they're not actually hiring? And that they're running leaner because things are not going well. And by the way, if I were running a convenience store and it was running like shit, I would love to be able to say, well, here's the problem. We can't hire. And there's my alibi, right? McDonald's. I thought McDonald's was rocking and rolling I've thought about that. And after COVID, I said, these guys must be printing money. Look at how long the line is of cars waiting to go through the drive-thru. Then I realized the drive-thru window is one cash register. And then the other day I went through there. Don't ask me why. I'm on carnivore diet now because I go through McDonald's too many times. It took 3 minutes per car. That's one cash register, 3 minutes per car. You can really be faked out that the consumer is healthy. By the way, a breakfast meal costs like $12. I don't care how healthy the consumer is. I am really well off. And I look at $12, I go, that's ridiculous. Someone who's, swinging a hammer or something for a living, they're going to look at $12 and go, I'll make eggs at home. Yeah.
Their prices are coming down, by the way, right?
No, I don't think so.
The egg prices haven't come down?
Oh, egg prices.
Yeah.
McDonald's doesn't come down.
No,
I'm a little grumpy right now. The other problem I have is if we're really at a high, let's say hypothetically we're at the top. Let's just say coincidentally you and I are filming at the day of the top, right? They're supposed to be euphoric. Does the world feel euphoric to you?
Not at all. Not at all. I'm a little euphoric because I'm in precious metals, but that's it.
Well, but that's it. So my risk assets, the ones I control, there's stuff I have some stuff I don't control. I've got fixed income, which basically you get 4% whether you like it or not. And a house, which I have to include because it's worth too much money. Although who's going to buy it, right? I already made that case. But the risk assets I control, I'm up 65% year to date. And I'm grumpy because the market is broken. And the S&P is up something like 21%. Does anyone think the S&P grew the ability to produce wealth 21% this year? Does anyone think that from 2015 to the present, where the Mag 7 have gone up 10x while their average revenues are up like 2x? Does anyone think that's normal? No, it's not normal. And I'm frustrated because I think I'm going to go to my grave not being given good opportunities. By the way, if you buy Philip Morris or something, when they hit the sell button on their S&P 500 index, Philip Morris is going to sell too because it's in the index. Now, the Mag 7 are going to non-linearly get whopped because they got non-linearly boosted. But when the average investor decides it's time and they're starting to get creeped out, they go, I've got to thin down now. And if the market starts dropping, they go, if it drops anymore, I'm not going to be able to retire. So I've got to get out of these goddamn markets, right? Everything, they always say everything sells, but that's because people panic and sell. You only have one choice in passive investing. You sell the whole market or nothing. You can't tease NVIDIA out of there. You can't tease Tesla out of there. You can't tease Microsoft out of there. Apple. Apple hasn't invented anything new in how many years? 15 years? Right? How many $4 trillion companies are there? The NVIDIA is now bigger than the market cap of Japan. This is going to be the chapter of a textbook. right? It's going to be like the Imperial Palace being worth more than the state of California story. And I at some point I think we're going to hit a bottom when Jensen Huang is in an orange jumpsuit. That's my suspicion.
Yeah. No, it's headed that way. Like more and more questions arising, and we don't even need to talk about the circle jerk that they're producing there. Meaning they're just lending money to buy
illegal.
From themselves or from.
We call that illegal, right?
Yep, pretty much.
Fraud. Total fraud. Yeah.
They're just
selling
lending money.
Lending them money. They buy the chips. They then use the chips as collateral to borrow more money to buy more chips. You got Jensen Huang saying China's going to beat us in AI, which is code for Trump give Sam Altman, who himself looks like AI, he's got the dead-eye look of AI, to buy more chips from Jensen Huang. We should be just telling the AI guys to go jump off a cliff. And I know there could be a very real battle. Whoever wins, and we have to win. This is the argument for nuclear weapons. This is the argument for a huge military. This is always the argument. If we don't win, they'll win, and therefore.
Yeah.
And so dump tons of money into AI.
You need a common enemy to unite the people. Back to that topic.
Right. And you're creating an infrastructure. Like electricity, this is a great comment actually made by Gunlock. Electricity was as transformational as anything we've ever seen in the history of mankind, right? The electricity stocks obviously did well at the turn of the century. They peaked in 1911. 1911. Electricity was just getting started, and they peaked in 1911. The internet peaked before the internet actually did anything of real value, right? 2000, the internet was in its infancy. It's now up 7% a year annualized from the 2000 peak. Do you really think you should be able to make 7% a year off of a monumentally high peak? No, the answer is no. So at some point, I'm going to be old. And they're going to say, yeah, Dave called it. So what? He was too early, broken clock, blew the house up when the clock was right, but no one cares.
I was going to ask you about.
You can tell.
I love it. It's like I'm so frustrated.
Fried.
I'm so frustrated looking at the clock because we got like 3 minutes left for the self-imposed 30-minute limit here. And I was going to talk to you about gold and silver, but I'm more keen on learning how you made 65% this year. I know you included the house, but the housing market is fairly flat.
No. I don't consider that a risk asset. That's in my total assets. My risk assets are about half of my total assets, and that's 65%. That's owning silver miners, gold miners, gold, silver, platinum. Platinum's a great bullish story. You want a bullish story? I'm not talking momentum. I'm talking a flat-out bullish story. Platinum is a phenomenally bullish story based on fundamental logic that Graham and Dodd would love. So that's where I'd put. If you put a gun to my head and said, buy something for bullish arguments, I'd buy more platinum, which I bought 9 times this year. And I didn't buy anything else. I bought nothing else but platinum this year.
And way more excited than silver? Or
I already owned it. Too much silver. But yeah, platinum has got way better fundamentals than any metal that I know, based on what I can figure out. The above ground supply is minuscule. A small hedge fund could buy it all at current prices. It's been a deficit production for a number of years now. By some math, and I'm going to throw out a wild number because I'm going to get it wrong, but in something like 3 years, the above ground supply will be gone at the deficit at the current rate. You get it from South Africa and Russia. South Africa could shut down in a heartbeat. It's a failed state in the making. And you're not going to not sell cars with catalytic converters with platinum in them because the platinum costs too much. You're just going to pay whatever you have to pay. And by the way, the hybrids use more platinum than internal combustion engines. So as we go to hybrids, which are I think the logical technology to go to, not EVs, hybrids, we're going to sell more platinum.
Absolutely. Dave, just in the interest of time here, I know you put out a yearly review and a yearly report once a year. You pulled the last one from your X profile, but give us a teaser. What do you plan to put into the 2025 edition?
My brain has locked up. I've been in a fork in the road, which you can hear in my frustration. I almost decided not to write anything. I decided that I had to write something. I don't want to talk about Trump. I don't want to talk about a lot of topics. I almost don't want to talk about markets because I've been saying the same shit for years. And at some point, the Babson break's going to break. But it's I can only say it's overvalued so many times in a row. And then like I know a ton about the Charlie Kirk shooting, but it leads straight to Israel. So I'm going to have the Zionists climbing up my ass like there's no tomorrow if I write about that. And so it's a great, I am going to write about my Tucker Carlson experience and then the response to it because I'm that pissed off. And if Israel wants to come up my ass, let them come up my ass. They'll find nothing but shit up there.
Some peanuts. So,
some peanuts. That's a monkey joke right there.
There's it's. I went to South Park mentally. That wasn't good. Mr. Hanky. What's the release date? Do you have a release date in mind for the report?
No, I'm struggling. It is what it is. It'll be ready. I even think it's gonna suck. I mean, but I always think that. But this year, there's a good reason to believe it's gonna suck. And I would actually just not write it. But there are so many people asking me about it. I gotta at least tell them why it sucks. And so normally it's 250 to 300 pages. You can't imagine the emotional purge it takes to write at the end of the year 300 pages. And I've been hitching, right? I've been like a robot who short-circuited, and you can't write 300 pages while you're mentally hitching, going, I don't even know if that's true. By the way, that bear, that mountain lion that delivered its cub to your front doorstep, that's not a real video. I mean, is there any bet your life on is real? They're about to catch the guy who put the pipe bomb on January 6th. Do you believe it? I don't. They're going to frame some bastard. They're going to fry him. I don't trust the FBI. I don't trust. There was 274 FBI guys at January 6th, right? They wouldn't admit there were any. Now, there's 274 at January 6th. There's Ukrainian operatives January 6th. They lie about everything. Everything. So how do I know what I'm writing isn't total bullshit?
Yeah, no, it's a challenge. It's absolutely.
And if you want to talk about just markets, let's write about markets where there are no liars on Wall Street.
No.
Right?
No, it's all hunky-dory. It's all hunky-dory. Mm-hmm. It's all kumbaya and everything's going to the moon.
Absolutely.
So, Dave, I hate to end this here. That was brilliant. I really enjoyed it. Thank you so much. You got your Twitter handle, David B. Collum. That's where we'll send everybody. That's where they can find the report once you get to publishing it.
Yes.
So
I will. I'll put out something.
Dave, thank you so much. Merry Christmas. I hope to catch up with you in the new year, very soon in the new year, to maybe discuss your report a little bit in more detail. And,
last bit of financial advice. Fastest way to go bankrupt is to be married to a grandmother. She will dump your entire net worth on those grandchildren.
I see that. I can see that from my parents. So, yeah, I believe that.
It'll happen.
I see that. Yeah, no, I believe you. Fantastic. Dave, thank you so much. Merry Christmas. All the best for 2026. I can't wait to catch up with you again. Take care. Everybody else, thank you so much for tuning in. What an awesome episode here with Dave Collum. Make sure to follow him over on X. Make sure to check out his report when it comes out. He said it's not worth reading, but I think it is. It will be. So go ahead and do that. And while you're at it, hit that like and subscribe button here as well. We tremendously appreciate it and just appreciate the support. Thanks so much for tuning in. Take care out there. Be safe. Merry Christmas. Take care.